private employers in the U.S. added fewer jobs than expected in June, 150,000 according to ADP. That is the third straight month of slowing job creation. Joining me now to break down the data, we've got Nela Richardson, who is the ADP chief economist. Great to see you. And as always, thanks so much for taking some of your time after this fresh data drops. Want to get your read in on exactly what we're seeing in some of the moderation in key sectors. I remember looking through this report earlier this morning, and you essentially said in a nutshell, had it not been for leisure and hospitality, we might have seen a much different report.
That's correct, Brad. And it's great to be with you. This is the third straight month of job declines. Declines in job gains, I should say. So we've seen this gradual cool down all year, but particularly over the last 3 months. 150,000 jobs is solid, but it's not broad-based. It's really coming from a couple of sectors on the services side. And leisure and hospitality, as we noted in the press release, is responsible for the bulk of the gains. It was 42% of the hiring this month. So the question before us is, can the labor market continue with this gradual cool down when there's just one or two sectors really driving the gains every month?
What does that signal to you about wages right now?
Well, we don't need the signal. We actually have the paychecks. So at ADP, back over 10 million workers every month for this report, anonymized, but individual to individual matches. And this is the first time since August of 2021 where job gains for job stayers have broke below 5%. That is significant. Yes, it's a significant milestone in our trajectory back to a wage growth that is consistent with 2% inflation, but it's still elevated from pre-pandemic levels, and the declines in job growth are slowing. So we're not seeing big jumps downward. We're seeing an edging down in a very slow and gradual way with these annual job gains.
What about for job hoppers on the other side? Those who are looking across some of these listings online and saying, you know what, I think I fit the bill, I fit the prerequisites to be able to throw my hat in the ring, and I'm looking for a little bit of a pay bump too.
And they'll get it. In this market, we're still seeing a pretty elevated pace of pay bumps for people who changed jobs within the last year, about 77.7% annual growth for job changers. But there has been some shifts, notably in that very leisure and hospitality sector that's driving a lot of the gains this month. We're seeing that you don't get the same pay bump you did a couple years ago. In fact, leisure and hospitality is the one sector when we look at job switchers where you actually lose money from changing jobs. So that is a key difference in terms of how the sectors stack up in the month of June.
Additionally, we got to give people some actionable tips here. Say that they are looking for a job right now and trying to make sure that in whatever capacity that they're seeing hiring or even some pullback in the number of jobs that are open here, where can they make sure that they are kind of deploying their best efforts? Where are some of the hot sectors?
This is not a hot sector market. It's a cooling market. So the first thing to note is that it may take a little longer to find that next job than it would have taken a year ago. People are staying in their jobs longer. We saw that in the JOLTS data, the job openings, hiring, and quits data that came out from the BLS earlier this week. Quits rates are about the same pace they were before the pandemic. So this is not a place where people are leaving jobs and there's a lot of job openings that come to fruition. It also means that there are some segments of the economy that are slower than others. So if you look at the good sector, manufacturing, construction, natural resources, it's slower than services. So if you want a quick job, I would head to customer-facing jobs in healthcare and leisure hospitality. But if you want a high-paying job, you might have to wait a little longer for that manufacturing job or that construction job, perhaps in professional business services. So patience is the key for the Fed, and now patience is the key for people who are looking for a new job.
All right, patience in the job search type summer. Nela Richardson, thanks so much for taking some time here with us today. A lot to really wrap our minds around over the course of this week with some of the employment data, readings such as that from ADP. ADP Chief Economist Nela Richardson, great to see you.
Thank you. Good to be here.